Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Thursday the 15th of August 2013. Well, it certainly is summer markets. We are in that type of environment whereby volumes tend to dip. But we have seen some excitement in FX, so don't worry if you're not on a holiday or you are still trading, then we still have plenty of things for you to chew on. We've got a ton of economic data. We've had it already, but we've also got a ton coming out later for the US, including that key CPI data. But the focus today very much squarely on the UK. It was another day, another strong data print for the UK. Let's take a quick look at this cable chart. Now, this is an unusual cable chart in that it's a very long-term chart. It's a weekly chart. And as you can see, it is still going strong. We had a very strong retail sales report, and that just really complements some other strong data that we've had this week, including a real large drop in jobless claims. That's a number of people claiming unemployment benefit for July. We also saw a pickup in one of the house price surveys to its highest level since 2006. And then we also had that dissenter on the Bank of England, the guy, Martin Wheel, who did not vote for forward guidance. That was considered pretty hawkish. We've seen a real spike in gilt yields. 10-year gilt yields still now at their highest level for 2 years, getting very, very close to 3-year highs as well. And that really is supporting cable. So as you can see here, we broke above that 155.70 level. That was massive. That had been the high from last week. And now we are, where are we targeting now? Well, 156.30 comes into view. That's the pink line on the chart in front of you. And that is the 50-week moving average. Now that is the key next resistance level of note above there, and we could get all the way to 157.5. As we said, there could be further upside for the pound. Certainly yields are supportive, but also look out what the dollar does as we get closer to that US economic data. Now the other pair that's going to be right square in focus today is dollar yen. Let's take a quick look at dollar yen. This is the Ichimoku cloud. Dollar yen really struggled to make any type of headway. That really is a sign of what the dollar's been doing. It's really been struggling of late. Obviously today we saw the yen just get its groove back a little bit after the finance minister in Japan denied that they were planning a corporate tax cut. That drove some safe haven flow into the yen, just caused a bit of a risk-off tone to the markets already, caused dollar yen to decline there. It's managed to climb back to the 98 handle, but we really need to get above that 98.70 level, which is where the top and the bottom of the daily Ichimoku cloud really converge. A weaker close above 98.80 would be quite a bullish development in the short term, but it will all depend on that economic data. Data that supports tapering in September from the Federal Reserve could give the dollar the much needed boost it needs. But for now, trading sideways. Again, if we were to get weak economic data, then we would look towards the lows from earlier this week, 97.50 to start with, and then potentially sub 97, 96.80. Okay, everyone, thanks so much for joining. Good luck trading today, and do join us soon for more. Bye-bye.